Welcome to TopstepTV, everyone. This is the London session. My name is Deeyana Angelo. I've been trading for about 17 years, and 12 years out of that I've been trading futures. Wow, time flies. I specialize in crude oil and gold and a few other metals. Occasionally I pop in some equities trades, but that is not generally my main market. I am in a gold trade right now, so I'm going to run you through that. I'm going to start on the daily chart first. Here we go. On the left hand side we have the daily chart, so very large time frame, but I look at it every single day. We're at the bottom of the range, and I saw that we have some put levels around 26.50. I also see that we have the Hogue weekly kickoff level at 26.36. So that entire zone is definitely a potential area of interest. Now, how you're going to use that, that's obviously down to you, because again, this is not a signal service or anything. And any level that we mention is for educational purposes mainly and only. However, they can be useful areas of orientation. So one of the ways that I like to use, especially Hogue's levels, is to try and match them with anything that I might be looking at, and then to figure out the contextual nature behind it. And yes, I'm still in Belgrade for another day, but I will be back in London in my normal office tomorrow. Okay, so on the intraday time frame, what do we have? We have gold opening with a gap in relation to yesterday's London value area. Now that always opens up a possibility for some kind of a mean reversion trade, or even just a mean reversion attempt. And right now I'm seeing a failed auction. So that's why I'm in this trade. So I went in around my level of interest. The entry was at 26.51. I believe. Let me scroll down. Yeah. And so far it's heading towards overnight VWAP. So for now, there's nothing else for me to do there. If we start to kind of lose steam, I would probably pull this off. Still building up these XFAs, so they are relatively new. And also, this is the first time that I'm doing copy trading on Topstep because I haven't done it before. So obviously keeping it pretty small, just in case I do something that I'm not supposed to be doing. So I'm getting used to copy trading on Topstep. I'm in with just like a 3 micro GC trades and aiming for that over $200 on the day. If I end up getting, you know, 400, 450, that's also very good, and it's fine. So that's kind of like my goal for these new XFAs. So for now, you know, this is going pretty well. I'm just taking it very slow, very relaxed, you know, smaller size, but copy traded over 4 accounts. So yeah, that's the gold trade. I've looked around some of the other markets and I didn't really see all that much in play, because the way I like to do things is to see whether any of my levels of interest are actually there. The very first step that I do whenever I'm analyzing anything is to decide which level I'm looking at, how far it is from the current price, and whether I want to be a buyer or a seller there. Now, sometimes you will be in between those levels, and then you might see, you know, a move breaking out. And then you might deem that you want to take something up to the next level that you deem is going to act as a magnet. Now, usually the types of levels that I use, they do act as magnets, right? We either have overnight VWAP, or I have call and put levels from the options chain. Then I have my ADR ASR levels, and all of those are there as a result from some kind of an order flow type activity. So they do act as magnets. But unless I'm, you know, especially for London, unless we're at the level already, I don't like doing breakout trading, because a lot of the time London will be a little bit muted, even though recently, especially in the last couple of months or so, we have had some like pretty serious movement from London. And one would even argue that it's more interesting than the main session in some products. But yeah, London is a little bit tricky because it doesn't quite have the same mechanistic action as the New York session, and therefore it makes it a little less predictable on some of these products. So just keep that in mind when you're trading London. Yes, I'm just gonna click on the full screen. I always forget to do that. Somebody's asking if I can take you through the indicators. Okay, here's the thing. Topstep for me is more of an execution platform. I have a whole suite of indicators on another platform that I've used for many years, and it's very well known. I have a software development firm, so I worked with a software architect to develop the indicators that I needed, and I spec them out. So naturally, I have them on my other screens. Now, those are my Blatek indicators, and I've been using them religiously for over 7-8 years now. So all of the levels that I will talk about, they are basically on that other platform, right? Now, some of the indicators that I have on Topstep X are indicators that help me with timing and execution. So I will take you through those. But bear in mind that some of them I have on the chart because some of the other people that I work with also have them. So I want to see what they're seeing, if that makes sense. But one of the main indicators that I do have on Topstep X and that I really enjoy is this volume profile. They've done such a great job. Like, I have volume profile on my ones as well. However, I keep the TPO profile on the other platform. When it comes to looking at when I'm going to get involved in a trade, one thing I found extremely useful is a 100-tick chart volume profile point of control, right? It's incredibly useful because it can tell you whether we're breaking through an area that has built up some volume on that super low period, and it's not really a time frame because a 100-tick chart is not time-based, and therefore it kind of adds another layer into the timing. Another thing I have here is the 3 moving averages indicators. They are EMAs, and there are 9 EMAs. Each of these are on different settings, how to calculate them. So the top one calculates it on the high, middle one calculates it on the close, and the lower calculates it on the low. So what does that do? Well, I am somebody who comes from swing trading, and instead of having the issue of, how would I put this? So most people get really freaked out when their trade is in profit and they close out early. Now, I have the opposite problem. I have a problem of waiting too long to close some of my trades. So I need something to tell me when it's time for me to exit a trade that is meant to be an intraday trade, much shorter. But what I tend to do is to just sit on trades even if the trend starts slowing down. I just sometimes, if I'm off my game, I will not close the trade because I'm always looking for those larger chunks of moves. So basically I have these EMAs just to show me how strong is the trend, is it waning or is it reversing? And that has been helpful for me to get me out of some trades that I maybe would have held a bit too much, too long. All right, so we are getting close to my target here. Now, I don't know whether the commissions here are going to get me, but let's see what happens. You see, 197. All right, but that's okay. That's an okay trade for the London morning. I'm traveling later today, so I'm not sure how much more I'm going to be trading, but that was the trade. I was looking for primarily return to VWAP. Okay, now let's move on to the next set of indicators that I have here. I obviously have Topstep levels, so I don't have all of them there, but I do like to keep Hoag's levels on my chart because I found that they are extremely helpful for me because they always they're located at similar areas where I might be looking for something, and then when Hoag's levels tell me, hey, this is also that he's looking at that area, it adds an additional layer of confidence. I have the highest respect for Hogue because he is my mentor, and he is one of the reasons why some of my skills on market profile have come up so much. He was very kind to answer all of my questions many years ago when we first crossed paths, and then since then we've developed a friendship, and that is carrying on to this day. And professionally, I really, really respect Hogue. Like, he's probably one of the nicest people you will ever meet, and that just aids in, you know, my respect, love, friendship towards Hogue. So I always have his levels on because they're very helpful, obviously. And he is, you know, he's such an amazing human being who has a lot of knowledge and is always willing to help. Always willing to help. So I would also advise you guys to keep his levels out of all of the Topstep levels. Those are the ones that I will always have on my chart. I always want to see what Hogue is looking at. Now, when it comes to getting me out of a trade, I can see that Future Millionaire has another question. So what are you using to tell you to get out of a trade? Which EMA? I use a 100-tick chart, and then if the price crosses over all three of them, but that's not the signal that gets me out. If another candle, so let's say right now what I'm looking at here, if we cross over with one candle, that's like a warning sign. It's like, okay, be careful, trend might be ending. But what really gets me out of a trade, my systematic signal, is if the next candle completely closes below it. Okay, so we get another 100 ticks and we're just below all 9 EMAs. That is when I will be like, okay, closing the trade early, ahead of my target, because there's no more juice in it, right? And that's been very, very helpful for me. Now, again, we're all different, guys. So you might have a completely different set of problems. You may be somebody who exits trades too quickly. You don't need this, okay? You need something to keep you in a trade longer, not shorter, right? But for me, this has been an excellent way to just run my sort of, you know, sometimes these trades obviously don't go for 70 ticks like this one did, but they will go for, you know, 35, 40 ticks, and I see the trend slowing down, and I will still stay in a trade. Not every day, obviously, but, you know, we're not always on our A game, so we need to keep track of our own triggers, problems, and everything, and try to sort those out as much as possible to the best of your ability. So this is something that's helped me, right? Now, when it comes to the volume profile on a very low time frame or low tick chart, so a 100-tick chart, here is how I'd use that. This is mainly for entries. So if I'm looking at a long, like I was doing before, just before we came on, I was looking at this volume point of control that was around about the same area. So what I wanted to see is that we go higher than the point of control on a 100-tick chart, and it is a volume profile. So it's very dynamic. It's not time-based like on the TPO profile, which can be a little bit late, especially if you're, you know, looking for more kind of scalpy type trades or looking for faster movement. It can be very late, you know, by the time that it shows a change, it works on a 30-minute time frame, and, you know, it will move the point of control at some point. However, I wanted something more responsive for these faster trades. And that's where the volume profile visible range, so there's two, there's the volume profile fixed range, and there's the volume profile visible range. That's what I've got here. And then I look at the 100-tick chart. When the market starts, when the price starts crossing over the point of control on the volume profile on the visible range on a 100-tick chart, that is my sign to enter a trade, because we managed to battle through an area of high volume and we're now going away from it, right? A lot of the times you will see if we're in a directional move, we come up to the visible profile volume point of control on the visible, God, say that 10 times fast, right? POC on the volume profile visible range. the price won't be able to break it because there was like too much volume created within the directional move, and it actually acts as resistance or support depending on the side that you're running your trade on. So that can be a point of entry for a directional trade. But whenever I'm trying to do a failed auction or something like that, I don't use it as an entry point, but I will use it as an inflection point, right? So I will want to see the market go through that area before I get involved. Failed auctions are reversal trades that are momentums in the opposite side. So that's why the volume profile on the 100-tick chart is actually really, really useful for that. Because it means that you had a level where everybody was building volume, and now we reversed, smashed through it, and now we're picking up momentum away from that area. How do you exactly determine weekly kickoff high or low? Okay, so this is Hoag's proprietary calculation. He uses a variety of things, including some options activity, open interest, support resistances, volume profile, whole bunch of stuff. He calls it chicken bones, you know, he uses some chicken bones as well, like a whole bunch of things to make a rather discretionary decision of which area means that the higher time frame institutional players are going to need to adjust inventory. So that's what he looks at. I'm not privy to his entire process because, like I said, it's his way of doing things. And he has mentioned it before that he looks at a number of things, but it is discretionary. You know, it's not like something that you can kind of go, oh, how does Hoag do it? And then everybody does 1, 2, 3, 4, and then you get the weekly kickoff levels. It will always be a little bit different because these are market generated levels, right? So obviously every week there might be something else that comes into play. Maybe it's open interest one week that actually gives the actual pinpointed level. But on some other days, maybe he sees something on the volume profile that will make him give more weight to that. So you know, it's not kind of cut and dry, you know, formula. He does have a lot of discretion in it, and again, this is why it's even more magical, right? That he can so accurately pinpoint, like that last week's crude oil weekly kickoff high. That was crazy, man. Like I think we hit it to the tick, and this is something that happens all the time with his levels. So naturally, as soon as you know I started observing his levels on the chart, I was like, damn, this is like really accurate, man. And no one knows how he does it exactly, so you should ask Hoag whether he'd be willing to elaborate, but he did say himself that there's a lot of discretion in it, so I wouldn't hold my breath that he's going to teach you how to do it. And you know, we are all allowed our proprietary little, you know, bits and pieces how we get to these levels. Dragon Spec says, D, volume profile, visible range 100 ticks. How do you determine the number of bars to include in your look back? That's discretionary, okay? So I would be looking at where we consolidated. So let's go all the way back to how this looked this morning. So for example, we moved away from this visible profile, and why did I choose this particular section? Is because this was the consolidation, right? If you look at how the chart looked, it was just kind of weaving up and down, and building volume in the middle, and then it started moving away from it. So it is definitely a more discretionary way of looking at things, but every time you start to consolidate, I like to effectively just look at the visible range of the consolidation to see exactly where we are distributing. So for example, right now, if I just choose this area, you will see that we have 2657 as an area of the point of control where they've stopped moving. So now we wait for more information. Are they going to go higher or are they going to go lower? Nobody knows. But yeah, point of control on the volume profile to me is always an area where we stopped moving and now we want to see where they're going to take it next. So to me, that's been an excellent way of doing things, but it is discretionary based on the consolidating areas. The consolidating areas can be very low range, so like we have right now, but they can also be pretty big, right? They can also go into a little wave up and down with a nice larger range. And when you see that, and you're in a range-bound day, well, maybe, or a range-bound part of the day, let's say lunchtime or something, and there's not enough movement, that can give you a different type of information. So if you do see, let's say we have ballpark 45 ticks of range on gold, and we're in New York lunchtime. Usually there's not that much movement, and there will be some sort of a range established. Well, if you look at that, let me see if I can find something that resembles anything similar, and then I can illustrate it. All right, so let's imagine that this is lunchtime and that this has, and it does sort of ballpark 40 ticks inside it. Well, lunchtime hour and point of control right in the middle, it means that if you're aiming for a range-bound sort of activity like, Dolby style range trading, you want to use point of control as a target and try to aim your entries to be away from point of control, closer to the edges of the visible range. So again, it serves another purpose. But for this particular gold move that I was running, I was looking for a failed auction momentum trade back the other way through the initial balance. So again, for me, it was a springboard to get involved and look for that momentum. Two different types of looking at how volume point of control on a 100-tick chart can serve you to make better trading decisions. So two very different ways of doing things, but at the same time, whilst which part of the visible range you're going to be looking at is discretionary, what isn't discretionary is what time of day it is, what sort of a trade are you looking for, is it a momentum, is it a range-bound trade? That can actually help you figure out how to use point of control. If you're looking at a range-bound activity day, point of control should be looked at as more of a target, so stay away from it. But if you're looking for a directional move, it can actually absolutely show you when they start to move through the point of control, and that can be an inflection point for further movement. So hopefully that makes a little bit more sense. And I do consider myself a systematic trader as much as possible. However, I'm still a manual trader. I'm still a human clicking buttons. So there's always going to be discretion in that. And I've learned that the hard way when I first tried to create algorithms based on what I was doing. And then the software guys were asking me a whole bunch of questions that nobody's ever asked me before. And I was like, maybe I'm not as systematic as I thought I was. And it's funny what you will find out about yourself when they outright ask you a question. Well, I was like, oh, when we're at the swing extreme, we want to scan for reversals. And they go, so how do you know you're at the swing extreme? And I said, well, yeah, I can see it, right? And they're like, yeah, but the computer needs to be told that it's a swing extreme. So how do we solve that? And I was like, I don't know. It took us probably about 8 months before we figured out a way. This is where my Q points came from. So we tried the whole zigzag method. It didn't work. We tried a whole bunch of other ways of reading trend and exhaustion of trend. And in the end, we actually came up with our own proprietary way of looking at previous high, previous low, and then looking at the pre-swing to ensure that you're not getting involved in a consolidation before it kind of runs higher or lower, but to actually get a true swing up and down. And that took, it took 8 months. It took like forever. Something so simple for us, just looking at the chart, seeing that, for example, we have a high here, explaining that to a machine is quite interesting. All right, I'm going to have a look at the other markets. I'm probably not going to do too much more trading today. Maybe I'll do another one at some point. But again, I am traveling this afternoon, so I'll be on a plane for most of the afternoon, and that's not great. I don't want to run any open trades. Okay, so we've done gold. Let's have a look at crude oil. Crude oil is, I think they want to take it higher, but I think they've also run out of juice to do so. We had some supplies that I was talking about even last week. Actually, let me jump to the weekly chart because it might be a little bit clearer. Yeah, so this whole area is one big supply, right? If I go all the way back, huge supply. And that's the originating point. So you can see where this wick from the 2 days ago, Friday? No, yesterday. So you can see where that came from, right? They went all the way up into the originating supply, which was a drop-based drop, and they wicked into it and started selling off. However, we have some core resistance levels that have now moved from 78 to 80. So that means that the market participants probably want crude even higher. That's how I would read it, okay? Doesn't have to mean that it's going to happen this week, but just by the fact that, you know, those major options areas have moved up by $2, that's something to take note. However, we're still having trouble going higher. We have the Hogue's weekly kickoff high at 77.40, and again we're having problems, right? We are selling off from there. So what would be the next area of interest? There was a little bit of indecision in the area around sort of 74.50. So let me have a look at options levels as well. Yeah, but I don't really have anything really options related until sort of 70.50, 70 evens. So that's like 500 ticks lower than where we are. So what does that mean? Well, it means that either they're gonna take it to 80, continuing this uptrend, and this is just a momentary pullback, or it means that we're gonna drop like a stone at some point as a corrective move from all the Middle East stuff that brought us where we are today. And yesterday I did say how many candles we had on the daily in the upside move, and that I was a little bit skeptical about crude oil continuing the upside this week. But then yesterday we went into another up move, and it was a sustained auction, just carried on higher, didn't really look back much. There was a momentary pullback. I think it was like it had about a 40 tick move inside it, and then they immediately pulled it right back. So that was very bullish. But then today we're starting London with with quite a lot of sellers being present in the market. So if I'm going to look at options activity, yes, we have moved from 78 to 80, but right here we don't have anything. So I wouldn't be super surprised if this starts dropping like a stone. The larger time frame point of control on the volume profile is at 71.20. So again, we're not really at any areas that I can kind of run longs from. I wouldn't want to be long at these areas unless we dropped already like quite a bit throughout the day, and we're staring at like the last half an hour of crude oil trading. Maybe that could be, an opportunity for a slight pullback intraday as a mean reversion trade. But other than that, yeah, I definitely don't want to be long around these areas, especially not if we're making another turnaround from a supply, and this is a fresh turnaround now. That gets a little bit dangerous. So yeah, if I manage to have some time to trade today and I manage to find a short, that would be my choice. And if not today, then maybe tomorrow, maybe Thursday. I'm not in a rush, definitely. Stefan M says, where do we find hogs levels? You find them on the indicators in Topstep. So if you have Topstep, go into indicators and strategies and then start typing Topstep, and you will find Topstep daily levels. When you put that on the chart, I already have it, you will see a whole bunch of levels. So they have last week's high, yesterday's value area high, point of control, value area low. However, those are New York specific levels. For London, I can't use those because it's a different session completely. So this is another reason why I have another charting package. They have settlement that can be useful. Yesterday's low, and here they are. Weekly kickoff low, weekly kickoff high. So those are the only levels that I want to have on my chart. I also have last week's low because last week I was looking at that and wanted to have it on. Otherwise, the rest of it is down to you. You know, do you use yesterday's high, yesterday's low? I look at them, but they're not necessarily like something that I would look at every day, especially not if we're opening like inside range. And then, you know, you might have a good trade as a responsive sort of activity, you know, range bound activity from those areas. But for some of my, I think that's more relevant for equities more so than crude oil and gold. Because crude oil, I find that because it's a thin market, it will overshoot some of those regular areas. But at the same time, it's pretty accurate with some of my average daily ranges, average session ranges. I find them more reliable. However, hogs levels, I always have on my charts. So that's how you find them. All right, I was looking at platinum just a minute ago before I came on, because I thought platinum kind of looked just as interesting as gold. So let me change this now. Because I do trade metals a fair bit, and depending on the time of the year, I will gravitate towards either gold, platinum, but silver is a little bit expensive for these accounts. But I did used to look at silver quite a bit as well. But even micro silver, like what is micro silver actually? Let me see. I never really. Some of these relatively new contracts, I have no idea what the tick value is. So let's see, silver micro. Is that a micro? Yeah, okay. So let me just see. Let's just open. It's $5. Okay, so it's $5. Interesting. Yeah, I mean, even that is pretty expensive for these. Yeah, I mean, $5 per tick. You would need 150K for that. I mean, you know, it's a little bit tricky to be doing that. Okay. I just got done for a round trip. Okay, never mind. But yeah, I just wanted to see what the tick value was. So yeah, $5 for micro silver. Yeah, you would need to have a nice little buffer in there before you start trading that. So this is why I gravitate away from that when I'm doing these smaller prop accounts. But platinum is pretty good. Like platinum, you can use like a 35 tick stop. And yet it is still $5 per tick. However, it's slower, and it's like it's not gonna whack you by $3,000 in 3 seconds because the moves are like crazy. So platinum to me is very, very acceptable to trade on these sort of accounts. So as you can see, we're also arriving in an area of a demand. So we're at the bottom or quartile bottom of the range. And if we can get some buyers stepping in, that would be nice. I do have some levels just below. So I have levels at 966. and 960. So I would like to see those touched first. And then if we can maybe get a trade into the overlap, that would be very nice. Let's have a look at the 30-minute chart. Just like gold, it's opening below value. It's a decent gap. It's a decent hole. And we're below VWAP right now. But we're not too far away from VWAP. So again, this is not a super violent move down, just because we're sort of tracking alongside these 9 EMAs as well on a 30-minute chart. But the main reference here is how far away from VWAP we went. The further away you are, and the closer you can get to the other side where you might have a magnet of some sort, like either options levels or ADR low, ASR low, the bigger the distance from VWAP, the more probability that you are going to see a move back to it at some point. This is why if I'm looking to get involved in London trading, I don't like to see it close to overnight VWAP, because it means that we haven't really moved much, and immediately you are looking at opportunities that are just not, they don't have enough momentum inside it. Oh, Andy has a very nice question. For TPO profile in crude oil, what timeframes do you use for regular versus overnight session? So I always, when it comes to the TPO profile, I will always split the profiles to its own dedicated session. So if I have the London session, I will use for crude oil 8 a.m. London up to NYMEX open, which is 2 p.m. This is referencing my time in London. If you're looking at Asian session, I will be looking at the Tokyo and Shanghai trading together, even though technically Tokyo opens at midnight London time. But I always feel like the real move that is not a fake out actually comes when Shanghai opens as well. So then you have Sydney, Tokyo, Shanghai exchange opening. And they all kind of run with quite a bit of volume. So what I find that at the open of Tokyo, you have like a fake out move, and then it sort of reverses, and that's the real move. And it's a very similar action to Eurex versus London. Eurex is a tiny exchange that starts an hour early and usually causes a fake out move in one direction, then London kicks off and reverses that. And the amount of people who get caught in that breakout when they haven't traded long enough is quite epic. So if you keep in mind that sessions will fake each other out, that can help you in looking at things. Now, when it comes to trading crude oil for the main regular trading session, I use the entire electronic session, but I use the NYMEX open, which is 2 p.m. my time, and that is 8 a.m. Central, 9 a.m. Eastern. But then I run it all the way through to the end of electronic close. So that would be 9 p.m. my time, 4 p.m. Eastern, 3 p.m. Central, even though volume will drop off dramatically sort of after the settlement. And the settlement is my time, that's 7:30 p.m. London, which is 2:30 p.m. Eastern and 1:30 p.m. Central. Yay, I got my time zones right. So I want to see, like, if you take yesterday, for example, let me have a look at crude oil chart for you. You will see what I mean. So sometimes we have these moves post-settlement that are significant, right? And if I were to cut it off, like this is no longer pit trading, you know, if I were to cut off at exactly 7:30, it kind of died off a little bit. Right, it died off, but then we had some movement in that same direction. So if I widen this is not trivial, you know, it's not trivial. So this is where it closed, and then, you know, we went up whatever this is. So 19, we went up like 20 ticks from there, you know? So if I don't include that, I find that I'm kind of missing a piece of the business that we've done. So what I do, I basically run my calculations on the market profile TPO from 2 p.m. my time till 9, which is 9 a.m. till 4 p.m. Central. And obviously you move that for an hour earlier sorry, no, it's the other way around. So New York time, 9 a.m. to 4 would be my calculation for market profile, and Chicago time, 8 a.m. till 3. And that's worked really nicely. Like, we've done a lot of tests, like statistics, data, to see how accurate those value areas are. They're pretty damn accurate, you know. They're very reactive, and sometimes they might overshoot by a little bit. The only time I've seen fake out value acceptances is if you kind of run into a value acceptance trade. So let's say we open below it, we close inside value, but then you have like an options level that was quite obvious in the morning that is right in the middle, in the way. So for me, that would be an invalid value acceptance trade. And again, it's discretionary because, you know, you have to take into account you know, what day it is. And usually these days now, since July, we actually have bi-weekly crude oil options. Before it was just like once a month, third Friday of the month, that would be it. Now we have bi-weekly crude oil options, and that's adding into the trends that we've been seeing on Tuesdays and Thursdays, because that's when they expire. It was done to enable market participants to react to the ever-changing markets and, you know, new news and coming in and a whole bunch of stuff happening with the Middle East this year in particular, to allow the participants to react quicker than having to wait for the next month to express their position. So now that options activity is causing, you know, a lot of changes in the way crude oil moves. Before, Mondays used to be really, really lively. Now Mondays are relatively muted. However, Tuesdays and Thursdays are really, really lively. And if you look at the stats on some of the data platforms, like we have Edgeful now, you will see that Tuesdays and Thursdays are when the trends usually are happening. So that options activity is definitely having an effect. And we absolutely need to take into consideration when we're doing the setups. And, you know, for example, like I said, value acceptance on a Tuesday. If I'm looking at it and I have the options level right in the middle of it, I will basically aim for the partial value acceptance. I won't look for the full rotation to the other side. Now, profile traders know what I'm talking about, and I've probably lost half of you now. Going, what? But yeah, it's all like setups relating to the profile levels that use the value area as a benchmark and an orientation point. So that's how I would explain it in slightly more simpler terms. But all you need to know really is that the value area is a distribution curve. So anytime you have any price activity, where is it distributing? You know, where did it stop moving and started creating some structure? That's called the distribution curve. And market profile, volume profile, it's nothing more than the study of how price behaves away from the distribution curve and inside it. That's all it is. And then they went into the rabbit hole and created a whole bunch of new setups that make you create better trading decisions, right? So if you can see things to a more granular level without losing yourself, you know, still having a methodical approach behind it, that's much better than just sitting down and going, oh, long of VWAP, because that's a, you know, long of VWAP. Yeah, it's a valid strategy, but it's a simplistic strategy that won't be applicable in every single market state. If you're in a range-bound market, try and going in off VWAP, you're gonna feel that you're always on the wrong side of the market that day, because you go long and then it's a range-bound day and it goes against you. You go short and it's rotating to the other side, you feel like it's going against you. And whenever that happens, whenever you're getting involved of a mean average of any kind, whether it's a moving average, Now, anything that's averaged out on a range-bound day, you're going to have a problem with entries because you're going to feel like everybody's out to get you. And you're like, oh, it's always going against me. No, it's going against you because you didn't identify the correct day type. That's why it's going against you. And I see it all the time in chat as well. People are like, going long. And we're like, we extended the initial balance to both sides and we're wicking like crazy and you're going long in the middle. Cool story, bro. And you can recognize these relatively quickly, like on NASDAQ. Every time you have a range-bound day, you're going to get a wick very early on. So if you have, let's say, let's go back a little bit. Here we are. So you see this sort of a movement where immediately at the open, like you can sort of, or even pre-market, this was news. So it kind of goes up and then it immediately goes down. There's no momentum there. And some people are like, I'm going to short it after the big candle down. And then what happens? They get a tiny move and then it reverses on them. And they're like, oh, it's all going against me. It's not going against you. We had the move, we retraced, rotated through it, and then we settled inside the range. That's all that happened there. And then if you have real wicks, here was another day where it was very boring. This is a hallmark of a range-bound day. So it tries to go higher, but then wicks like crazy, comes back into the range, and then just starts wagging around. And it stayed range-bound all of this day. This was October the 3rd. Yeah, that is the sign of range-bound activity. Whenever I see wicks, especially wicks that fail and then sometimes they even go to the other side and pull back, that's a range. So just look at that. Like, don't expect any magical breakouts and momentum trades. Just play within the range. It's entirely possible. We just need some critical thinking before we can get involved. And when you have a directional move, that would be rather obvious, right? You have a huge move outside of something, or they start to break the previous low, and they start to kind of spend time, and on Bookmap, you can see them as like more and more big bubbles. You can even see absorption happening. So, the buyers keep trying to step in, and then you get buyer absorption stepping in, and then they just whack through it. So all of that is like real-time order flow that can be paired up quite nicely with these levels that we give you, right? But yeah, wicks all over the place on a 30-minute chart in particular, that's rarely a sign of a nice, clean, trending day, But it's not impossible. It takes a while to crack the range-bound trading, although the more I do coaching with people, the more I see that some people are actually quite naturally inclined to trade ranges. Some of the others love momentums, and it never ceases to surprise me how different everybody is. Like, you give the same approach to like 5 different people, you get 5 different results, and it's magical, it's interesting, it's stimulating intellectually. And to me, just fascinating. It absolutely fascinates me. I've been doing this for a very long time, and I still just love it. To me, it's like playing detective. You come to solve a puzzle every single day. All right, so let's see if I've got some plugs to do for you guys. I know that there's some stuff I need to tell you about. Obviously, we have a new segment, Trade Live on TV. So even if you're not close to passing your combine or anything like that, but you want to trade with us, you can sign up to Trade Live on air with the Topstep crew. Currently, like I said, we have the Trade with Topstep, but we also still have Pass with the Pros. I'm going to drop the first one. So, Trade with the Crew. I'm going to drop that in chat. And Meet Anderson, I'm going to tell you what the DMI indicator is and why it's on my charts. Here is the form for Trade with Topstep. So that one is if you just want to come and trade with us and you're not close to passing a combine, but you just want an opportunity to maybe ask us some questions, hang with us, do some trading, that's gonna be amazing. Wow, Sam V says, I got funded today. Thanks, Deeyana, for all your advice. Well done. I wish I had one of those soundboards that Eddie and Ribs have. So I'm gonna just give you a manual clap. Well done. I'm so glad to hear that. This is why we do this, right? Our knowledge shared brings results for other people, right? So whatever I can share that can help you guys, it always warms my heart. Community, like prop trading is all about community. The reason why I went into prop trading is because I wanted to learn more from people who were more experienced than me. And to be honest, I still keep learning to this day. Whenever I'm trading something that I haven't traded before, I will go to one of my Topstep colleagues who already trade that. And I'll go, hey, how do you trade that, right? And, you can pick their brain, ask them a whole bunch of questions, and they're always, always happy to oblige. This whole community, while we're talking about community, let me drop you a Topstep Discord link as well. Because if you are looking to be a part of the community and get involved more with Discord, actually, Bruno, if you have the Discord, I can't find it here. So let's drop the link to Topstep Discord in the chat so that they can check that out. Community is what it's all about, because everybody's sharing their experiences. That is invaluable, absolutely invaluable. So all of our lovely coaches are in there, and they are very, very happy and open to help. That's what they're there for. Okay, so now if you want to be with Pass with the Pros, if you want to be on Pass with the Pros, that's going to be the second form that I'm going to drop. There we go. Now, so Bruno just popped in the Discord for Topstep, and I've just done the Pass with the Pros. So if you are in a combine, if you are close to passing it, check the last form out. All right, so let's have a look at some more questions. So Meet Anderson said, what indicator is the DMI that you have? Okay, so the DMI indicator that I have on here is because of Coach Robert, right? So he's been doing this thing where he's trying to trade YM. He's trying to trade the Dow, because that's what you guys wanted him to start trading. And he started using the DMI indicator as an entry signal. So he wants to take the entries when the DMI shows a momentum. Now, Robert is a momentum type trader. We all have like our different styles. So Robert wants to see something moving already before he pops in his trade. Now, I'm a little bit different, where I will front run a trading idea even before I see that momentum. But that's just like, again, different styles is what's worked better for me to minimize my own stop losses. And, some of the levels that I use are related to like options and value areas and a whole bunch of stuff that do end up having a very high chance of working out. So I'm not scared to get involved even before the main move comes in, as long as I see some sort of a weakness and, some sort of a slowdown in price activity. But Robert wants to know when we already start moving. If you've seen us trade together, you will know what I'm talking about. So for example, we had this YM trade where Jay was there as well. So we were looking at shorting YM and they were talking about the edge of IB high. But I said, well, we're still in IB, and most days we will smack through IB before we do anything else. Plus, I also have the ADR high up there. So we all decided collectively to wait for that to happen. And then it happened and started turning around. So what Robert did is to look at the DMI when we had the momentum already on our side. So we entered a trade and we didn't really suffer much drawdown. I think it was like 5-tick drawdown or something. And it did go in our favor, but we didn't keep it because the segment was ending. So we had to get off air. And lo and behold, like I wanted to do something else, and then I start getting messages both from Jay and from Robert saying, well, of course, now it went. And I think we grabbed like, I don't know, about 40 ticks out of it. And it ended up getting all the way down to our original target, which was VWAP. And it happened for power hour, but we obviously didn't want to keep a trade on when you can't manage it. So we just took whatever we could. But that's how Robert uses it. So he wants to see the momentum already in there. And I have it set on a pretty aggressive setting of 5 and 10, and I took this on advice from Robert, but I think he has 9 and 20. However, I found that was a little bit too late for what I was doing, so I decided to use the DR length 5 and ADX smoothing for 10. But I will be honest, that is not the primary thing that I use. However, I want to have it on my chart just in case I am on with Robert and he's looking at it. I don't want to be fumbling around, on air, getting the DMI on. So, and I did find that it's quite useful once the trend is already on. Like, for example, the gold that I was in, if you look at the DMI, it expanded. So this yellow line tells you how much momentum it is. I believe that is the ADX. So it means that the momentum is picked up. And then we get a whole bunch of green stepping in right around the time when I was looking for the market to go over the volume POC on the 100 tick chart. And then it just stayed pretty much green until the exhaustion of the trend, which was up here. And you can see how dramatically it falls off the yellow line. And then at the same time, we have the crossover of those 9 EMAs. So it's all telling you the same thing, right? It's all saying that we're slowing down around overnight VWAP. So however you feel comfortable, whatever method you connect with, use it. Use it to make better trading decisions, more systematic trading decisions. You can even use it to trail stops if you want to trail stops. I personally don't like it, but again, it's completely a personal preference. So yeah. Sean Glatt says, what time is usually the trade with the crew? I believe that that's during fast markets. I think they have this idea that they're going to bring in people and they're going to, they're going to have guests on for fast markets. But don't quote me on that because, again, I've been focusing more on the London session and on my own segment on Thursday, so I haven't been that involved in fast markets at the moment. Benjamin Chia says, will there be a drafting sign-up segment during your show for the new Coach Hoop VIP that TopstepTV has started? I am aware of that because I do see it in the notes. However, I believe that Eddie will be the one to give you that. I did not get the prompt in the documents to plug that, so I don't know whether it's going to happen today. So yeah, it's best to keep an eye out during the main broadcast if you want to be a part of the VIP. Then just keep your eyes peeled. I know you say that you work. But I do believe they're going to keep plugging it throughout the main broadcast. And I mean, the broadcast is like, it's what, 7 or 8 hours long. So, you can try maybe catch it during your lunchtime. You can maybe ask for it when you have some time. And I'm sure they will oblige. But yeah, that's during the main broadcast, right? Tom says, I size with micros for momentum and full size on higher time frame trend lines. Helped me to get past the 5K payout mark. Again, whatever works, man. Like, if you like to use trend lines for confluence, that's great. If it works for you, it helps you get payouts over 5K. It works. Keep using it. That's your jam. Not everybody has to, trade exactly the same way, right? DMI style, how did you get the bars? Yeah. Yes. Okay, I will oblige. So that's in style, right? Let me just make sure that I'm not covering that up with my face. Okay, so you can see this style thing here. So you can have it as just a line, but if you want to have it as a histogram, you need to choose that. So I have it in columns. but you can also have it as a histogram. I quite like the columns, so that's just you know, I'm not exactly a spring chicken anymore, and I'm getting that sort of mid-40s. I need reading glasses for certain things, and if I'm just like doing it with lines, it just does not register at all. I just completely forget that it's even there. So Granny D now needs a little bit more prompt on the colors to actually see stuff. Now, interestingly, Dakota said that he's colorblind, and I'm not colorblind in the red and green, but I did notice that I don't see blues very well. However, I know the reason for it. Like when I was a child, I actually got irradiated with like x-rays and stuff. So they actually damaged something in one of my eyes. And that's been like a recurring theme where I don't really see the differences between blue colors very well. And I am aware of that, but when it comes to blues and greens, I see them perfectly, right? So that's why I chose such screamy colors on here. And whenever I have bright lights on, it's not going to mess with my sort of decision making. And if I'm on with Robert, we're trading together, I can clearly see what Robert is seeing, and then we can kind of match up our analysis. Alright guys, don't forget to check out some of our other segments. I'm obviously going to be here tomorrow, but we do have Coach Jay's at the buzzer. He's usually on with Coach Paul as well, and I know some of you have asked me about currency trading, so check them out. Coach Paul is one of the few people who trades currencies. He trades everything, and he has like 40 years of trading experience. He's a very knowledgeable guy. Obviously, Coach Jay is amazing at volume analysis. So check out At the Buzzer. It's such a good segment. Obviously, we have slow markets. We have weekly, is it the weekly kickoff with Nick for a Tick? I think that's the name of his segment. Nick, great guy, all around, one of our best traders. So check out those segments. Obviously, Dakota, legendary with his slow markets class. If you find any value in what I've told you about here today and what we talked about, please click the like on this video as well. So not the one in the chat, but the one underneath the actual video. That really helps us to keep growing this segment. And don't forget, Coach Ray is going to be here on Thursday with me as a co-host. So we're going to have some fun with Coach Ray as well. So let's just keep this growing. If you are enjoying the London session, show us the love. Okay, that is it. I'm going to sign off now. So thank you for hanging with me. I will see you again tomorrow. Enjoy the rest of the broadcast. This has been TopstepTV, and I'm Deeyana Angelo. Take care.